Hey, hello everyone. Welcome to this weekly market review. I am Chris with Elliott Wave Cafe. I'm the market strategist here, and we're going to take a look, as we always do almost every week, at the markets. We're going to run through the core markets first, and then we'll come back and dive in a little bit the S&P 500 and see where we are, from a quarterly, monthly and weekly perspective, maybe even take a little bit of a look at the daily time frames and see where we are in terms of the Elliott wave counts. So we'll start here with our look at the S&P, and then we'll go to the core markets really quickly. Things are looking pretty decent. I mean, the reality on this chart, it is that we're trending higher. We're continuing to be in an upward trend ever since we established a low in late October 2023. We've had several periods of pullbacks and corrections, some of them to the 10-week moving average, a couple of them towards the 40-week, which is the 200-day. And we're continuing to look towards the path of least resistance, which is to the upside at the moment. Every correction here seems to get bought. I mean, the market, the chart did something a little bit wrong here when it pushed lower. The bears had a chance to really drive this and correct this further, but they weren't really able to get further much below 5,000. You had those highs from late 2021 at around 48.20. Didn't even make it all the way down there, and the bids start coming in. Then we had another bullish week here with the hammer. If you watch my videos, or if you're into the Elliott wave updates, you know kind of how we approach this and how positions we started to be as soon as we notice on the daily charts that the market is starting to recover and start to look good. So we broke above this high from mid-late March, and we came back, tested the 10-week moving average, and now we're breaking and closing higher. So the chart is not doing anything wrong at the moment. It's really hard to take a bearish stance here when the weekly close it's at new all-time highs, and you see quite a bit of participation here. Now, not everybody agrees with this. Obviously, people will talk about breadth and other kind of macro views that can derail this market. Sure, anything can happen, but my view it's that everything it is in the price that's on this chart. The market, it's forward looking, and it shows you in here that you have longer wicks at the bottom, which means buyers are showing up. So it's really hard to argue with that. You need to break clearly back below these levels, start to break below the 10-week moving average, and tops, at least more major tops in markets, take a little while to form. They're not going to form in a week or two, right? It takes longer to derail some of these larger trends. So taking a look at equal weight, struggles a little bit in here, but it's not really doing a whole lot of wrong either. Clearly you have the large stocks that are carrying the markets as they're supposed to, right? These are the leaders, these are the markets that, and we can briefly kind of go through these 6-7 stocks that continue to show outstanding relative performance and strength. And those are the ones that we have to pay attention, not some, small stocks that really nobody cares about, right? And companies that, have barely, 500 million or maybe $1 billion market value, right? Those are not the ones that are going to make a dent into the trends of the market. Nasdaq 100 here continues to act very strong with a nice, again, bullish close and new all-time highs. I think if you're bearish, you're going to have a hard time listening to my ramblings here, or my talk, because I'm just purely focused on price. I'm not going to give you any bearish meat here. That we're about to crash or anything like that. So with that being said, continue to expect me to have this view that the market it continues to remain in a pretty decent uptrend, and if that changes, will change as well. But for right now, that's not the case. Nasdaq Composite also, super decent move, continues to be outstanding here, moving higher. Semiconductors, Nvidia will split. I think on Monday we will have 10 for 1. There might be a little bit of a pullback there, or maybe some correction, but that chart is really not doing anything wrong just yet either. Yes, there's a lot of talk in a lot of circles. Everybody's excited about Nvidia and pricing, and people talk about it, they own it. But again, that top in Nvidia, if it's going to form, it's going to take a while. It's not going to be like, hey, Monday we have a top. Not that they ring the bell there, but that's going to be some few tries before that thing rolls over, if it does. So semiconductors in here with Taiwan Semi and many others continue to behave outstanding and continue to show a lot of relative strength. Looking next to the Dow Jones, has been struggling for the last couple of weeks. It finally came back and stabilized, but it could be nothing else than just a small flat formation in here. So we're going to watch for the break back above the 40K. Russell, and this is where you have a lot of junk in terms of companies. I mean, obviously you have 2,000 stocks, so take less, more or less, I should say. I don't know if that's the exact number, but it's still struggling, and I my views in here, and I keep repeating that every day, on our updates, is that unless we get a clear break above 207.5, even to 10, it's hard to stick with this. So there'll be plenty of chances to start to initiate positions. You saw a little bit of a spike in yields. That goes against these stocks that are in, there are a lot of growth here, and it's going to get hurt by that. You saw a little bit of a spike in the dollar as well, so they don't really like that. I mean, the job numbers came much stronger. So anyway, there's a lot of kind of macro that can be spun around, those points, but the chart is the ultimate, I think, judge and executioner here, right, in terms of kind of what you're supposed to be doing, and right now it tells you, hey, it's not ready yet. So we'll continue to watch it. Bitcoin, it still struggles a little bit to break above that 72K level. We're long in this one, and we'll be adding to longs on a clear break of 72. That hasn't happened. It got very, very close on Friday. Pulled back a little, but it's just kind of flat and sideways. It consolidates on a lower volume, which is good. Really not doing a lot of things wrong. I think this break of 72.5 will eventually come, and will continue to move higher. Below 64K, I won't be interested in keeping any long positions, at least from a shorter term perspective. I'm not talking about buys that were at 42 or at 30 or at 10 or whatever, right? That's a different story. I'm just talking about the fresh money here. So everybody's watching when we're going to get a break of the 72.5, and it might have a few false starts, but again, I remain pretty bullish on this, and here is kind of my count on it. I think we're still in this larger wave 3 on Bitcoin, Ethereum. Clearly after that strong week a couple of weeks back, before the ETF. I don't know if the ETF is live yet or not, probably not yet, but 4,000 is a key level. We'll eventually take it in here. Might be a bit more consolidation, which is fine. We're not expecting these markets to be straight rockets all the way, but all the time. So I'll be a buyer on Ethereum of pullbacks. It looks pretty decent still. Yields here came back to 4.2, now back to 4.4, so still in the range. Helped by this dollar that's kind of got a little bit of a strength, at least on Friday with those job numbers. Again, reduces the chances of the Fed maybe cutting this year, but who knows, right? We're going to have CPI on Wednesday. We're going to have a Fed decision at the same day. So CPI is in the morning. You have the press conference later on that same day. It's going to be a lot of volatility around that. But for right now, listen, the markets, I just showed you, even on the S&P 500, they kind of show the trends, and it's going to take a lot of hawkish talk from Jay Powell to derail that. And I don't think he's in a position to really press that too much, being in an election year and all. So I think it's just going to be more of the same come Wednesday. Here we are with gold that's been pulling back slightly, right? It's having trouble getting about that 2400, with a clear break. The 10 week is still trending, the 50 days, the 40 week is still trending upwards. Yeah, we closed below it, so there might be some more consolidation, maybe even some more drops in here, but you're still in an uptrend, so might not be ready to go, but I would keep it on a watch list and look for signals, maybe even on the daily, to see when we can kind of resume the uptrend. Especially, we're going to have to wait for the dollar to stabilize and see what that's going to do. But so right now, both gold and silver are on a keep them if you have them, right, and not really ready to initiate new positions based on kind of how these charts look. You're coming back into a 10-week moving average at about 28.85, but all the way down to 26. I think this thing is buyable. Like crude, not a lot here, and hasn't been doing anything for weeks and months, so not really much. And then volatility is back at 12, supporting the idea of a market that's not really perceiving a whole lot of risks out there at the moment. So really quickly, let's just get to kind of what's going on with the waves in here. You might agree or disagree with my labeling in here. That's not the point. The point is that markets over time, over decades, continue to improve and go higher and higher. Companies get better, they're smarter, they're continuing to show profits, right? You're moving from one era, industrial to technology, to all of that, and continues to show strength, with periods of correction, obviously. And we just had one not that long ago, right? We had this one back here, then we had another one. So I think we're in a much larger stage of this larger third wave. We're looking at the bullish year here in 2024, maybe even in 2025. By 2026, probably we're going to start to correct and have some pullbacks, but that's a little bit down the line. So looking in here at the weekly, with the wave 2 low here again back in 2022, that was the bottom of the market. Then you go down, you go up in a 1-2, another 1-2, and then you have this kind of larger third wave. Now the discussion starts to be kind of what happens with this move here, right? Is this a fifth wave? We're going to start crashing, and also nobody really knows if that's a wave 5 or if it's another 1-2 in here and you're continuing to go. It's hard to make that judgment right now until the market actually shows you that it's pulling back. And for right now, the price, you could wait for a fifth wave to finish for months, and still not give you what you're looking for. So the idea here is to go with the trend and go with the bullish count until proven otherwise by the market. So here on the weekly, I still think there is no clear evidence of this wave 3 being finished. And when it does, I think we will start to see it in a lot of deterioration on stocks, and that does not mean a crash. It just means that you're likely going to get a wave 4 at this degree of trend, this kind of magenta color, which here is a minor, which can correct several hundred points, but we're not looking for anything like that, right? That's a much larger degree. And if you look at this wave 1 and this wave 3, just to create the size, of a wave compared with this one, you're looking at the S&P, over 6,000, maybe 6,500 or more. So overall, the markets remain in a much larger trend. If you're looking at the daily time frames here, you can see, my labeling here might be off slightly, and that's okay. But here is the idea, right? That this is the wave 3 that we're watching, that I was just talking before. There were some targets to the upside. Some of them, almost got hit. And if this was a 4, right, making the assumption that if that was a 4 and not a 2, because it could be a 2. If it's not a 4, if it's a 4, that means that this one here, it's a 5. What strikes me here is the almost equality between this wave 3 and the wave 1. And if wave 5 is not super short, that means it might be very long, right? So Looking at this, I talked into the updates there on Elliott Wave, our kind of daily counts and daily videos, looking at this as a 1 2 1 2, 3 4 5, maybe another 4 and another 5, and then you finish a wave 5. By that time you're at about whatever 55 5600 in the S&P, and then you begin at wave 4 at this kind of yellow orangey color, and if that comes to happen, you're probably not going to get much below this level, because that's the wave 4 assumption at a lesser degree. So, given that you're going to go up there, you might get something like that. So, it might not be a lot, maybe, again, several hundred points in a correction, and then you begin again to go further to the upside for this next move in this wave 3. And, right, so 4 5, that completes this guy, then we have to complete this one, and then that one further up. So there's a lot of time here. There's a lot of kind of waves at a higher degree that need to be completed, and I don't see anything massive to the downside. So this is this is kind of what we're monitoring here. Let me see if I have I might have an hourly as well. See if I put it up. No, that's the NASDAQ. I think I have an hourly count. Maybe, let me see if I can find it. Right, there it is. So here we are, right? 1 2 1 2. And I talked in one of the videos about this probably being a flat in an ABC, but this wave in here, it's kind of, I think, too sharp to be a B wave, and not super clear in terms of being a 3-wave move, which is supposed to be for a B wave here. 1 2 1 2 makes more sense. 3 4, we talked about this again. 1 2 1 2 3 4 5. So there might be another 4 and another 5 to complete this guy, to complete a wave 3, and then you got to do a 4, which I think it's going to be way too deep to come all the way to the bottom of this at about 5200. So it might just be somewhere around the 5300 area, if at all, and then pushed higher once again. So I think again there's plenty of I think plenty of time to get bullish, plenty of time to do anything kind of shorter term. But overall, I remain bullish and respecting this uptrend in here. So really quickly, let's take a look at these stocks. Apple, I think it's the most important stock in terms of potential breakout right now. We're sitting at really at about 200, almost 196. I think they have some events coming up. But this move here looks highly corrective and looks like it's done, and looks like we're going to be beginning the next much higher leg in Apple. I'm not saying this is the right time to entry, because you're right before a major breakout. You could be in with a tested position, check the pullbacks, but I think there's a lot of potential here for Apple to break and move towards 220, 230, maybe even 250 over the next months, and it looks kind of primed to do so. Then you're looking at Amazon again, really not doing anything wrong, gets bought into pullbacks towards 175. You got a series of waves here. I still think this is a corrective move, and it's going to push higher as well. Google, again, just kind of catching up on their AI and all. Super strong stock, a good leader. I continue to be bullish. I have positions in Google, full disclosure, and I think it should continue trending higher by the way this looks. These are just kind of clean charts. Meta, again, even though it had such a huge move and a little bit of a drop in here, what if that's just a simple ABC flat? You're going in a 1 2, and you're continuing to go. If you're going to lose 440, then yeah, we can say that maybe that's an AB, and then you're starting to get a C wave. And that will offer the next opportunity there. But for right now, it looks pretty good still. And then Microsoft, a little bit less on the relative performance, but it came back at the end of last week, and again, it's just probably going to break towards 430. I don't think these are stocks that you can mess with. I did several times and I got hit. So these are huge market leaders, continue to post great profits, and they're pretty good. Nvidia, I mean, everybody loves it. I know eventually will stop. It hasn't yet. I mean, this was a clear signal of a just a nice, not even engulfing, maybe more like a piercing type of a candle, failed breakdown, and here we are moving from 900 towards 12. I mean, let's see, one, two. Let's say that that's a 3-4. Let's just play that game, and then you have 1 2 1 2 3 4 5 4 5. There 4 5. There could be a couple of more series of 4s and 5s before begins anything more meaningful. But even then, it's not like the stock is going to come back to $700, right? If it's going to come back, maybe back towards 950, towards 1,000, find bids, and then move again. I doubt that we're going to get a correction of this size in Nvidia, even with the excitement that's in here. So I'll continue to watch the market as always, guys. Go ahead and check Elliott Wave Cafe. We got chats in here and daily updates. So anyway, thanks for watching, and I will see you later. Bye bye.